The crypto market is about to go absolutely crazy, but you need to know one thing behind all of this, and that is what happens after the whole craziness cools off and the curtain is closed. Well, in this video, I am going to be addressing what's happening right now around these markets and something to keep a close eye out on for as well. So with that being said, welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So if we take a quick look at the after show from the Fed rate cuts, we can see here just in, Bitcoin leads 321 million crypto inflows post Fed rate cut. Digital asset investment products saw 321 million inflows last week, with Bitcoin driving the surge after the Fed's interest rate reduction. Now, on top of this, the market has been having a nice upward swing. AI coins are starting to pump heavily, and everyone is still looking at this and saying, well, when altcoins, right? When are we going to see alt season? And like I said, AI coins are starting. We're going to start to see money trickling down. But I do believe that this is going to be a market cycle that tops earlier than most people anticipate. And I really want to address that in this video and talk a little bit more about that. But let's first start off with a few posts by Kiyosaki letters. So we have breaking prediction markets are now pricing in a 59% chance of at least 3 more rate cuts in 2024. In other words, markets now see a base case of at least 75 basis points in additional rate cuts this year. Meanwhile, the Fed's latest guidance was that an additional 50 basis points of cuts are expected. Markets even see a 17% chance 100 plus basis points of additional rate cuts this year. This would be very interesting to see, by the way. Markets beginning to price in a 4% chance of a 75 basis points rate cut at a single meeting. Interest rate futures are trading like we are in a crisis. Now, the thing to really kind of watch here is the fact that markets don't believe the Fed, right? We have markets see a material chance of 2 more 50 basis point rate cuts this year. Meanwhile, Powell just said that 50 basis point cuts will not be the norm. Markets don't believe the Fed. And the problem that I have with all of this is typically when we get a 50 BPS rate cut initially, it leads to some sort of crisis. Now, there's not enough data to go off of to support that argument, but everyone has been looking at 2008 and saying, all right, well, this is very similar to 2008. And although, yeah, technically it is, we don't have enough data to go off of that, and we can't just say, all right, well, that's it. We're going to do the same exact thing here. History does not repeat. It rhymes. So as we do think about that, I do believe that we are headed into a storm in 2025, but I don't think that it's going to happen the way everyone is really kind of looking at it. Over here, we have the most resilient market in history. The number of S&P 500 stocks outperforming the index hit 339 quarter to date, the highest in 22 years. This is also in line with levels seen in 2000 before the dot-com bubble popped. The share has nearly tripled compared to quarter 2, when only 125 stocks outperformed the S&P 500, the lowest in at least 3 decades. Interestingly, the Magnificent 7 stocks are underperforming the index for the first time in almost 2 years. The market rally is broadening. But also building upon this, the Mag 7 looks as though it is ready for a blow-off top, essentially. And this would be the final push, in my opinion. I believe that this is going to be the final push for stocks. Will probably lag behind stocks a little bit when it comes to crypto. But I do believe that we are about to have a major run-up. But everyone is getting extremely bullish. For an example, over here we have, global liquidity is surging. The Fed just lowered interest rates by 50 BPS. The money printer just got turned back on. The stablecoin market cap is at an all-time high right now. Fresh money is coming into the crypto market. Are you bullish enough? And this is going to wreck so many people. This right here. Everyone is going to follow the global liquidity index, very similar to 2020 into 2022, where everyone thinks that we top in 2025. I want to go back to 2006 all the way to 2008. And why is this important? Well, because the markets topped in late 2007. And if we really look at that, okay, this is the S&P 500. On the left, we have 2007, 2008. And on the right, we have the current market. Guys, the S&P 500 topped July 13th, 2007. It bottomed out in August 16th, before running up yet again, making an all-time high. Very shallow all-time high, by the way, and topped in October of 2007 before, of course, the cascade. Over here, we have the market topping in July 15th, bottoming out August 5th. Again, this is the middle of August. This is roughly the middle of July. We are already at that shallow all-time high. We're at the end of, September. The big question is, do we have enough to push beyond 6,000 for the S&P 500? And are we going to repeat this 2007, 2008, all the way into 2009 sort of price action, where we do go into a major recession, the crash just continues, and we continue to bleed out? Is that the case? It's going to be interesting to watch this, and I do think everyone should be watching it. It is a very similar pattern. I mean, this is almost an identical pattern. Here you guys have the top back in April, bottom back in April as well, before having that another surge. Again, this was not exactly around the same time frame, but we have February into March before running up yet again. Very, very similar price action. I mean, ultimately, if I said, hey, this is what our current chart looks like for the S&P 500, you'd probably say, yeah. I mean, it looks identical almost. That's why we are watching this closely. That's why I think everyone should watch this closely as well. Now, like I said, history does not repeat, it rhymes. Although, yes, the charts look very similar, I do think that we probably have a little bit more steam in the S&P 500 and in the markets before ultimately having that massive sell-off and crash. Now, I am watching for a possible Q4 top, Q1 2025 the latest. So that's my overall prediction on that. Again, we will watch it and really kind of assume if we are topped by market performance and if we are starting to struggle a little bit. And I'm definitely going to be watching liquidity, specifically the liquidity index, to see if we get a little bit choppy, because that chop is going to be a big indicator that liquidity is starting to slow down a little bit. We'll probably get constricted, which will ultimately lead to market selling off. I've also been watching the dollar, by the way. I am expecting a lot lower on the dollar. My overall bottom case for the dollar is the March 2020 lows, running the liquidity. This is around 94.69. So that's what I'm watching for when it comes to the dollar. I'm still expecting lower on the dollar. It's been very, very weak since the initial top back in September of 2022. But off of that, we also have over here, as the Fed cuts rates, central banks will resort to aggressive QE, flooding the market with cheap money and inflation, making the rise of a new global currency inevitable. That's why you secure your wealth with gold and XRP. Again, everyone has their own agenda here. You could buy Bitcoin, you could buy XRP, you could buy XLM. I personally am looking into utility altcoins, stockpiling them, locking them away in cold storage. I'm also looking into physical gold and physical silver. I think everyone should as well. And it doesn't hurt to have some cash saved on the sidelines just in case, for like real estate if you want. But again, that's solely up to you. But I do believe that we are going to see a significant rise in the markets. I think that we are going to see a blow-off top-like event, very similar to 08. For crypto, it's definitely going to be interesting, because this is going to be the first major time where we either see, okay, how is this going to react? And when it comes to crypto being a major hedge against a recession or significant financial crisis, I just want to stress the fact that go back to 2020, during March of 2020, and let me ask you all this. How did Bitcoin perform under stress when it came to, a potential crisis? Not that well. So when we think about that, is it really a hedge, or is it just a narrative pushed by these maxis to keep you at bag holding Bitcoin? Again, I just want to ask you guys that. But check this video out.
He or she who has assets wins. And you look at much of the Southern Hemisphere, you look at the BRICS countries, they're loading up on assets, on gold, on silver, on base metals, on soft commodities, on anything tangible. They're breaking away from this system. Even our allies in Saudi Arabia mysteriously bought 260 metric tons of gold, I think the number was. He or she who has assets.
So yeah, I mean, listen, as we really kind of look at assets, I think everyone should be stockpiling assets outside of fiat currency. I mean, fiat currency, it will run back up. I do believe that the dollar will continue to run back up after this. But the big question is, when is fiat currencies really going to end? Because we are right on the cusp of digital currencies. CBDCs are becoming a reality. Fiat currencies continue to lose their value. Their purchasing power is at all-time lows. So as we really kind of think about this, yeah, I think that if you don't have assets stored, if you're not securing your wealth with assets, you are losing significantly. But I also believe that this is what's going to lead the rally. For an example over here from Robert Kiyosaki, Bitcoin, gold, silver prices about to explode. As stated in my previous tweet, you talkers, cowards discussing which is better, gold or Bitcoin, will be big losers. When Marxist Fed pivots, cutting interest rates, and real assets go up in price, as fake money leaves fake assets such as the US bonds, fleeing to real assets such as real estate, gold, silver, and Bitcoin. As stated in my previous tweet, it really matters little which is better, gold or Bitcoin. That would be like people discussing which car is better, Ferrari or Lamborghini, as they take the bus. Those who own real gold, silver, and Bitcoin will get richer, able to afford Ferraris and Lamborghinis, while talkers who take the bus say to themselves, I really do not like either Ferraris or Lamborghinis. That is known as loser talk. Please do not be a loser. Remember my lesson from a military academy and the Marines. Acta non verba, your actions speak louder than your words. Please stop talking to yourself and ask yourself, how many gold and silver coins and Bitcoins do I own? Then please do something brave. Buy some more gold, silver, or Bitcoin before the Fed pivots and drops interest rates. You may soon be looking good driving a Ferrari or a Lamborghini. Now, as we think about those interest rates, if they are pricing in all of these major rate cuts this year, guys, crypto is about to skyrocket. And I think that as we really prepare for this, we have to prepare for what happens next. Now, when it comes to Robert Kiyosaki, a lot of the stuff that he does push is questionable. For an example, he's over here pushing, Bitcoin hitting 10 million, gold going to $15,000, and silver $110 per ounce. Again, it's a little questionable when it comes to this, but this is more so talking about a U.S. debt crisis. Debt is just ridiculously unsustainable at this point, and it only continues to get worse and worse and worse, and the printing is just getting worse and worse. Inflation continues to surge. So as we really kind of think about this, yeah, the end goal here is to ruin the traditional financial markets. They want to usher in the digital financial markets. This is going to cause a lot of these assets to inflate in value. Not, when we look at the dollar being inflated in supply, it's killing the value. That's why we look at these types of assets like gold and silver and even crypto. I don't really like Bitcoin all that much. I told you guys about Bitcoin so many times on this channel. I'm more so looking into the utility projects that have value tied to them that are actually going to be utilized. I think that that's where all the value lies. But as I've said, I do believe that we are headed into crisis mode. Everyone is looking at 2008. They're going all the way back to the Great Crash of 1929. Is this time really different? Again, like I said, history often rhymes. It doesn't repeat. If we are looking at the Dow Jones, and if we're going to go all the way back to like 1929, if we lose 90% of value, we're talking about roughly 5,500 for the Dow Jones. Guys, this would be a massive, one of the largest crashes in history in terms of value. But this is exactly what they want. This is what they have been preparing for. They want that great crash yet again so that they can reset the markets. And this is talking more so about the yield curve and how it inverted for 700 days prior to the Great Crash in 1929. The yield curve was inverted for 789 days from July 5th of 2022 to September 6th of 2024. So as we think about this, yeah, we're kind of right there on a timeline when it comes to this, and it is questionable on what's going to happen next. We definitely have to keep a close eye on this and prepare for a massive crash, even if we don't get it, right? So stockpile, some gold, silver on the sidelines, have investments into, digital assets that have value tied to them, that, will have value in this completely new system that the elites have been pushing, because I do think that, things are going to get very, very interesting in 2025. I personally believe that we're headed into a major storm. I think that by Q2 of 2025 is when things are really going to really kind of become a wake-up call for everyone. And it's going to be at that point where everyone realizes it way too late. And that's when we'll start to see people selling for losses or, panicking or becoming fearful. That's my overall opinion. That's my prediction. But as we do really kind of look at things, it's getting wild out there. I mean, this is a great post here by Finance Law as well. The Law of Diminishing Returns kicks in big time now. 2008, they printed 3.5 trillion for 12 years. In 2020, they printed 5 trillion for 4 years. And in 2024, they'll have to print 10 trillion for 1.5 years. Notice how the boom cycles are getting shorter, 2 times more money printing for 3 times shorter cycles. And yeah, I mean, listen, as we really kind of think about this, we have to have this in the back of our mind. When we look at how crazy these markets are becoming, if we think about how crazy the printing press is becoming for, the US dollar and for the amount of debt that we have out there, I mean, guys, this is not sustainable. We are going to have something break in a large way. And it is definitely going to be centered around these central bankers and what they really have planned. This has always been planned since day one. You go back to 2008, I've said it so many times on this channel, I don't believe that we really kind of bounced back from 2008. I think that we just completely printed money, propped up markets, and that was it. We never bounced back. So we are riding that wave, just waiting for it to crash. And I do think that we're getting closer to that. Everyone still thinks that everything's all good. Everyone's ignoring all the warning signs. They still think that, all right, markets are going to be up only until 2026. We have so much time to make money. Guys, go look at how long Bitcoin has been running for. Go look at how long most assets in crypto have been running for. When we think about this, yes, alt season is still yet to be here. Alt season does not last that long. I've said it, max 6 months, if that. And it seems as though alt season is getting very close to beginning. And if we're thinking about that, we're talking about roughly March of 2025 being the top for the markets. We'll have to reassess it, come back to it, but the warning signs are out there. And definitely keep a close eye on the S&P 500 going into October and even November as well. So with that being said, if you guys enjoyed this video, if you guys definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.